Hi, Dean Jenkins with FollowMeTrades.com, and there's been enough drama in the markets in the line Friday and then today Monday. I thought it warranted a quick update. So I'm looking at the S&P 500 futures contract on a daily market, and you can see Friday here is this big red down bar. If you remember, that was over 400 points on the Dow and over 2% on the S&P. Just clearly broke us out of the summer doldrums, the malaise, the channel, the sideways market that we had been in for several weeks. Broke clearly out of that on some comments from one Fed governor talking about on Friday the potential for rate hikes, and then another governor talking today in a more dovish tone that they would be circumspect. So the rally on Monday, you can see, was smaller. It was pretty significant, but smaller. Did not go above where Friday's decline started. So the question, of course, now is what's next. The probability is for more lows, and we're going to drill down to some lower time frames to see why. And you can see this price bar right here is the new day, the after market trading, and it's down just about 5 points right now. But let's go down to a lower time frame. So now we're looking at the S&P 500 futures contract on a 60-minute time frame, and there's a pretty clear wave pattern. There's an Elliott wave pattern that has formed here, and if we look at it, we're going to measure from here down to here, and you can see there's Friday's decline. That's a clear wave 3 on this time frame, and this is a wave 4 retracement up. Now the high probability retracement zones between these two blue lines, 38.2 to 61.8 Fibonacci retracement, it went above that, but it stayed below this critical level of 76.4. So this is still a valid wave 4, and we're seeing some pretty clear evidence of it turning down. Now it's up above the cloud just a little bit, the Ichimoku cloud, but you can see the cloud thinning out here, and so there's a pretty good chance that the next move down is actually starting. And if we drill down even farther in time, down here on a 10-minute chart, we can see this change in trend more clearly pronounced. And so it does look like the technical evidence, we've got a lower low, a pullback, new low, moving into the cloud thinning. So it does look like the probability is over the next day or two for the market to head down again. And if it does head back down, we can project a target zone for that by measuring this big move down, the retracement back up, and we can take a look now at where it would likely go, and the Fibonacci retracement zone. Again, we're getting pretty clear evidence now. We've got negative momentum on the oscillator, we're penetrating the cloud, we've got a crossover, so it really looks like we got into the wave 4 zone, and now we're heading down into a wave 5, and the zone for that would be 2106 to 2077. So I thought that was just giving that it was worthwhile to give that quick update. No guarantees, but this is the high probability that over the next day or two we'll work our way down into this zone here. That's it for this update. Stay tuned, and I'll provide any new updates as the story plays out. Thanks.